Hey, good morning, guys. This is Simon with Trade and Perform Coaching, and now Floh. We have merged forces. Flow AI. I've put the link on how to join Flow AI in our Discord server in the description of the video. I hope you'll join us. Um, just wanted to go over how to use the support resistance levels that we post in the morning every day. I'm going to go through ES and NQ, and then give you a few tips on how to use the 5-minute bars effectively and helping you find areas to trade in. So first, let's talk about yesterday. So yesterday, just this is again is covering the basics so you understand the day type. So this is called a balanced day, and the key about this is the open right here. And let me help you out. This is 8:30 in the morning Central Time. This is when the market opens. The blue line and the purple line highlight the first high and low of the first 5 minutes. And what we use this area for is to determine who's in control. So this is NQ. This is the first 5 minutes. And you can see on the 5-minute bar, what I like to get is what I call an orthodox close above or below. And that means it's a bar that closes that has no physical contact with that first 5-minute bar. And the first place that you see that occur all day long is all the way down here with about 20 minutes to the close, right? And the pattern that I usually look for here, so let me explain this. First of all, when we're inside and we're in balance, when we're in a balanced day, if you trade in the middle of this balance, you are likely to get highly chopped and highly stopped, right? It's really, really frustrating. So what you're looking for is to take out these edges. And the best way to take out these edges is to get below a prior 5-minute or 15-minute level, right? Come over here, get underneath, and look for longs in this location. And then your targets become the other side of the range, or at least the backside of another 5-minute bar. So at the minimum, I'm looking, if I get long down here, I'm looking up here. Let me make this larger for you so you can see how it looked. So in balance, I go, oh, we're in balance. So I'm going to look for longs once we take out the stops behind this 5-minute bar. And then my target is really to get back above here to the other side, but at a minimum, the next 5-minute bar. And then the same goes for shorting. So this has some algos on it that hopefully we'll be able to release soon into the room. But essentially, here, let me erase this. What I want to do so I can draw on this freely to teach y'all. So I can just hit the erase button and don't have to do this every time. So I'm going to duplicate this chart. There we go. It'll take just 2 seconds. Hypothetically. Okay, there we go. So what I'm looking for over here is, so I'm biased to the long side in my trading in general, not to the short side. I think it's easier, particularly when we're above the 50-day moving average, just to focus on the long side of the trade. So what I would have done here, and I did do, is if this is the 5-minute low, I'd look for a break of that 5-minute low, and then I'm going to go to my smaller time frames, which I use very small time frames for entry, to look long. And then my initial target is going to be back behind these wicks, okay? And then my extended target is going to be the other side of the range. And then you'll see where these little blue squares are, right? And again, hopefully we'll be offering a chart, a live 5-minute chart here soon where you can see these in real time. What I want to do is get behind those. That's the other way I can tell where there's a potential stop. So you have the first 5 minutes. You can see that we traded inside that 5 minutes all day. And if you use the simple rule, hey, I want to get behind my last swing. So here's an entry. Here's your next entry at 12 o'clock. Why? We take out the stops. We're on a balanced day. There's no downside momentum. And then what am I targeting? Well, when I got in here, I was targeting this, then this. I come down here. I miss my stop out points, right? It makes a higher low here. And then rolls up. You'd have to find another way to get your entry in here outside of that. We're just behind the first 5-minute IB with which by itself, see the first time behind it has the highest odds for a lift, but each subsequent time you actually want to break a prior swing, right? So we come down, we set a swing here, then we raise, and then if you'll look, my target becomes this up over here. So watch how I'm doing this, right? So I'm using this to help me predict where the market's going to go, right? So if I had gone long here using some other method because I couldn't stop out my stops down here, I'm going to target this, but then what the other thing that I'm targeting this swing right up here because that was the last swing prior to the low, and then I'm also targeting this up here. So you can see that leaves plenty. I mean, this is a lot of money when you're getting these swings and balance. The important thing is once you establish balance. Now, how have you known it's balance? Really easy. Friday was trend day up, and usually after trend day up or trend day down, the very next day is some variation on balance. So if you'll look to take out the stops, which assume it is swing, that there's stops behind the swing. That's how you figure that out. Assume there's stops there, and then when we get behind there, you're looking for long opportunities. So your next opportunity came over here between 12:10 and 12:30. We took out stops to the left, trap back in, and then this becomes your first target right over here, second target, third target. Then finally they attempted to take out IB high. You can see they couldn't get an orthodox close above. And once they took out that IB high, it failed, they rolled down. This is your orthodox close with a negative bar below your IB. And that set off the trend overnight. And you'll see that in that trend overnight, did I erase all the lines? I did. So here, I'll go back to the other chart for a second. This is why I did that. Now you'll see overnight, so this gray area, this was in the chart that we posted yesterday, right, this is the 50-60 retrace from Friday's low to high, right? So, and this was the afternoon swing low. This white line right here was Friday afternoon swing low, okay, prior to going to the high. So you'll see when we came into we fell down. This is into the close. I don't trade the last hour, but punches into the close, orthodox close underneath, and you can see it makes a beeline. Again, I'm going to duplicate this so I don't mess up this chart over and over again. It's just too much work to put back together. Okay, so you'll see in Asia, we make a beeline right here to 18,223. That was the level that was posted in the room in the morning. You can see that these are tradable responses, right? When you come off 23 and you rally up to essentially 40, that's roughly $350 to $400 a contract in those little bounces. They're good bounces. Then you can see we come to the back of the 62 retrace where you can see you got buyer response, and I say that because you can see they were lifting back up, right? And then finally, after Asia, we were underneath that key level, attempted to backside test it, and then we rolled right down finally into support. Again, gets another response out of the 18,143.75. And then they tried to push at 4 a.m. down to this 18,097, couldn't make it, got the response back to 18,142. And now they're moving back higher. So these levels aren't perfect. But if you look at this from a perspective of the way I look at it, the first thing I would have said was, right, the first thing I would have said is this. If you look, okay, so there was two. If you look from Thursday's low, this is the 50-60 right over here. So here I'm going to extend this out. And it was my secondary target. So let me extend this over. And then it'll make more sense. Okay, this is the 56. So follow with me. This is the 50-60 retrace from Friday alone. This is the 50-60 from Thursday's low to Friday's high in this area. So this whole area became really key and really important, right? And we haven't quite hit that 50 retrace yet. This was the 382 at the top, right? So, hold on one second. Hey, I'm making a video. I'll be over in just a minute. And then that was my curtain call to take the kids to school. So when you're going through this, right, and you look, we're in balance, right? Shorts would have been targeting this first 50-60 and then this next 50-60 down here. The problem was, so now think about the psychology behind it. You had a group of people trying to come out and take out this high, failed to take out that high, right? You had a group of people that are trying to push down to the short in this 50-60. And this is basically equal, both sides had equal power, and no one was dominating it till the end. The longs gave up and pushed into the 50-60. At this white line, this was the swing low, going back to Friday afternoon swing low, it gets a response. They get to the back of the 60T retrace. They attempt a response again because this is trending down now. Then we get into the 50 retrace. Excuse me, this is the 382 retrace right at the top. And it gets a response, and then we didn't quite make it. The 50 retrace is sitting approximately right here at 18,095. We didn't quite make it there. And then this was also another key support level, right? So how do I tie all this together? So the point is, I'm not using these levels by themselves to make the decision, but I am using them to understand where we're likely to get a stronger response. And then when I get my setup of whatever pattern I'm looking for at the time, and we'll be introducing this slowly via Floh AI, that's where I'm looking for the trade. I don't want to blindly trade a level, and I don't want to blindly have targets. I want to have areas I shoot for. So let me give you an example of that. When we come into the 50 retrace, see I got that little blue cone right there? And you don't need the blue cone. You can just see that was the last swing high. So if I entered here, if I entered here, right, my goal is to take out this swing right over here. Now, when I'm coming down here, if I entered in any of these, my goal would have been up over here. It obviously did not make it, right? And then finally you get the response of buying, and my goal is to take out this swing over here to the left, and that did make it. So, so what all this adds up to is that if you'll key off the key areas that we're posting up in the room in the morning to make your trading decision or to use it for your targeting decisions, right? What you want to look at is, like, if I'm coming down here and I'm trading Asian, I go, oh, we're at 18,223. That is generally a good area that I want to trade at, right? So if I come to that location, that 18,223, I'm going to go, oh, we're going to bounce here. So my goal is to enter the trade, get my risk off, and then try to take out this swing, and then try to push back over here. I know this is not going to make sense because it's been a while since I've explained the basics, but if you'll follow through, it'll start to make sense for you. When I get down over here to this support area, my target is to make it back over here. Now, this is a move from 18,161 all the way up to 18,198. So if I got this whole move, that's roughly 30 points or $600 a contract. So hopefully I try to keep my risk per trade around 300 to 350. So if I enter here, I have more than enough to get my risk off and push, or just take my profit and move along. I don't trade Asian, I don't trade European hours, so this doesn't much make a difference. And then when I know I'm in wide berth support areas, I'm looking for different clues within my micro setups to push into the direction that I think the trade should go. So let me summarize again. This is balance. The balance is very common after you have a trend day up or trend day down. You're going to look for a variation on this type of price action. When I'm getting to support areas, I'm looking for places where I'm getting signals to go long, to come out of those support areas, right? And I'm trying to get risk off and push away. And then what I end up doing is using both these swings and the support areas both as targets and as areas to look for longs. In other words, this is a great example right here. See how I have this little swing right here? So if someone came to me and said, Simon, where do you want to get long? I would have, and we're up here, I would have gone, hey, I'd love to get underneath this swing right here, find a long entry for the push back up. And the way that you view this, right, the way that you view this should vary from whether you're trading options or if you're trading futures. There are two different ways of looking at the trade, and you should most definitely be making a distinction between a good area to enter for an options trade and a good area to enter for a futures trade, because the futures carry so much leverage with them. A very small move can make you a lot of money. Options, on the other hand, can theta burn you if you don't get the location right and the direction right, and you have to approach it a little bit differently. But use either way, whichever way you use, you still want to go, hey, where are my support areas, right? What does the market like to do? The market likes to take out stops at swings, right? And I will continue this education series to help people use 5-minute and 15-minute bars plus the flow support areas to help them make their decisions. So this just should be considered basics. I welcome questions. You can You can leave questions on the YouTube video, or we will set up an area for general questions. I don't have time to answer each question individually, but if you'll put in the questions, I can answer them after reviewing them and put them up in the next video. So again, this is a little bit new to me in terms of trying to explain this at such a basic level, but I know it's very, very important for newer traders to understand the ebb and flow of the market and how it works. So that's it. We're gapping down today, and I don't have time to go through what my trade plan is today. I'll do my best to post it up in the room. And again, this is our first shot. Before I go, I want to show you really quick just the ES kind of had a similar pattern. If you look, yesterday ES opened. The IB is not on here, and I do not know why, so we're going to add it. Studies. Okay, so this is the first 5 minutes from yesterday, and you can see we do get an orthodox close above on ES right here. So in this case, this put ES, this varied wildly from what NQ was showing. This put buyers in overall control, so you can see the pushback into the IB, found responsive buyers, right? And you can see each dip back in, generated responsive buying until it finally exhausted at the very end of the day. But trying to short this yesterday was a brain beater. And then you can see once you get the orthodox close underneath the initial IB, the shorts worked much more nicely. So again, that's where I would attack. And then you can see overnight again on ES. Once we're underneath that IB, we came to, this is Friday afternoon swing low, got a responsive buy, into support, responsive buy, just behind support, responsive buy, and that's where we sit right now. So we'll go, and this will be a valid support resistance area today as well. So we'll just go at it. Remember, have a plan, have a process, digest the information. You don't have to turn it into trades immediately. We're competing against the best traders in the world. We want to take our edge and maximize the return that we can get out of our edge, but we don't want to guess. We want to be very clear on our trade plan and what we're doing, and these education videos will hopefully help you get your head right and help you understand where you're looking for the trades. And as we move along, we'll see various different types of price action and how those get handled. And if you'll follow this series, it will help you learn how to trade those successfully. Anyways, again, my name is Simon. I'm with Trade and Perform and Floh